If you stand at the threshold of the 1,920 seconds and look inward, it feels as though you're peering into a decade vibrating with electric promise, a moment when the world, scarred by war, yet hungry for life, decided to reinvent itself with an almost feverish ambition. The Great War had ended. The old empires had fallen. The rigid certainties of the 19th century lay shattered. And into that vacuum rushed a generation determined to dance faster, build higher, consume more, and forget the darkness that had come before. The Roaring Twenties was not merely a decade, it was a proclamation, a refusal to be ordinary, a headlong sprint into modernity. But beneath the glitter and jazz, beneath the soaring skyscrapers and stock prices, something far deeper and more dangerous was taking shape. An economy unmoored from fundamentals, a society intoxicated by speculation, and a financial system quietly priming itself for collapse. In the early years of the decade, America surged with vitality. Technological innovations appeared at a pace that felt almost mythic. The automobile, once a luxury curiosity, rolled onto the streets of every major city and soon every small town. Henry Ford's assembly lines transformed not only manufacturing, but culture itself. Mobility became democratized, distances shrank, and the rhythm of daily life quickened. Radios crackled into living rooms, transmitting music, news, and ideas with a reach no previous medium had ever achieved. Electricity spread across urban landscapes, turning night into extension of day, powering new appliances that promised efficiency and convenience. It was an era of acceleration, and the nation seemed convinced that acceleration itself was a form of destiny. But the true engine of the decade's euphoria was credit. Americans bought cars on installment plans, radios on credit, furniture on layaway. Consumption became untethered from cash. The future was pulled into the present, monetized, packaged, and spent. Even businesses transformed their operations under the gospel of leverage. Corporations expanded aggressively, issuing stocks and bonds to finance their dreams. Productivity soared, profits climbed, and Wall Street, long a symbol of steady capitalism, began to thrum with a new, speculative energy. If you were to walk into the New York Stock Exchange in 1927, the atmosphere would strike you as something between a cathedral and a carnival. Traders shouted, waved slips of paper, gestured wildly. The noise felt like a physical force. Stocks were no longer mere investments, they were tickets to a better life, vehicles through which the public could partake in the country's prosperity. Newspapers published daily market updates with the breathlessness of sports commentary. Ordinary families bought shares in steel companies, car manufacturers, utilities, even firms they barely understood. The market, it seemed, always went up. And when something always goes up, people start to believe it always will. Speculation became the national pastime. Margin buying, purchasing stocks with borrowed money, exploded. For every dollar an investor had, he might borrow 9 more. It was leverage stacked upon leverage, a skyscraper of risk built on the thinnest foundation of optimism. Bankers encouraged it, brokers celebrated it, politicians declared it proof of American genius. You could stand on any street corner and hear stock tips exchanged with the same casual enthusiasm once reserved for baseball scores. The nation had succumbed to a collective financial hallucination. Yet, even at the height of the frenzy, warning signs flickered like faint lightning on a distant horizon. Industrial production slowed in 1928. Farm income stagnated. Consumer debt rose faster than wages. Banks, particularly small rural ones, wobbled under the weight of failed agricultural loans. But these signals were easy to ignore in the glow of rising stock prices. Markets had become the measure of national confidence, and confidence had become a substitute for analysis. At the center of this soaring, shimmering economy stood figures whose names would later become synonymous with the excesses of the decade. Charles Mitchell of National City Bank, whose aggressive marketing of securities fed the speculative fire. Jesse Livermore, the legendary trader whose fortune rose and fell with the market's waves. And President Calvin Coolidge, whose famously minimalist philosophy, "The business of America is business," captured the decade's spirit and its coming vulnerability. Even the Federal Reserve, established only a decade earlier, found itself uncertain of how to rein in speculation without crippling legitimate growth. It nudged interest rates upward, but too gently, too cautiously, like a parent afraid to discipline a child already running toward danger. But speculation is a psychological phenomenon, not a mathematical one. Once markets drift into euphoria, restraint becomes unfashionable, even unpatriotic. Wall Street was not simply rising, it was glowing. The Dow doubled between 1,925 and 1,929. People saw neighbors grow rich in months, in weeks. A secretary could buy shares and become wealthier than her employer. A shoe shiner might boast stock tips to the men who paid him. Wealth had become a breeze, something that brushed across society indiscriminately. And nothing fuels risk-taking like proximity to easy fortune. Still, beneath the spectacle, the structural cracks widened. Corporate earnings no longer justified valuations. Investment trusts, predecessors to modern mutual funds, multiplied, stacking leverage inside leverage like financial Russian dolls. Stock pools manipulated prices secretly, coordinating buys and sells to lure unwitting investors into traps. This was not a market anymore. It was a stage performance, with shadowy directors pulling strings behind velvet curtains. And then, like all performances, it approached its end. By mid-1929, the market's upward momentum no longer reflected economic reality. Prices staggered, jittery investors sold, others followed. Confidence, so easy to build, so fragile to maintain, wavered. The first tremors appeared in September when the market dipped sharply, but the real break came in late October. On the 24th of October 1929, Black Thursday, the market opened to chaos. Sell orders flooded the exchange, tickers fell hours behind, banks and financier groups scrambled to halt the collapse. For a brief moment, their intervention steadied the market. But it was only a pause. Redefined not only the decade that followed, but the very rules of American capitalism, revealing how a boom built on confidence can transform overnight into a burden built on despair. For the collapse of 1,929 was not a single event, but the opening act of a broader unraveling, a slow, grinding descent in which the promises of the Roaring Twenties dissolved into the hardest years the nation had ever faced. When the dust settled from Black Tuesday, Americans awoke to find that the rhythm of modern life, once fueled by speed, novelty, and endless consumption, had seized like a machine deprived of oil. Factories that had roared with activity months earlier fell silent. Storefronts emptied. The bright lights of New York's nightclubs dimmed. A country that had believed prosperity was permanent now discovered that it had been living inside a bubble far larger and far more fragile than anyone had dared imagine. In the early months after the crash, many still clung to hope that the downturn was temporary. President Hoover insisted the fundamentals were sound, that confidence would soon return, that the American system was resilient enough to weather what looked like a passing storm. But markets do not respond to hope, and banks do not lend on optimism. The evaporation of wealth, an astonishing $30 billion in market value within weeks, crippled balance sheets across the country. Businesses that depended on credit tightened operations. Households burdened with installment loans found themselves unable to keep up as wages shrank and jobs disappeared. Consumption withered. And with each closed factory, each shuttered storefront, each unplowed field, the crisis deepened. By 1930, the speculative fever of the previous decade seemed almost mythical, as distant as a dream fading at dawn. Rural America, already weakened by years of falling crop prices, slipped further into hardship. Small banks serving farming communities collapsed by the hundreds. Savings vanished. Families who had once embraced the conveniences of modern technology, electric appliances, automobiles, radios, now struggled with the simplest necessities. In cities, unemployment rose in a steady, merciless climb. Bread lines stretched around blocks. Men who had worn suits to work now stood in silence, holding tin cups. The Great Depression was no longer an abstract fear. It had become a daily companion. But what made the aftermath of the 1,920 seconds uniquely devastating was not simply economic contraction. It was the collapse of trust. The same public that had believed so passionately in the gospel of growth now felt betrayed by it. Banks had encouraged speculation. Corporations had inflated earnings. Politicians had praised a prosperity that turned out to be hollow. And so Americans turned inward, questioning not only institutions but ideals. The decade that had celebrated autonomy and individual wealth creation now gave birth to a collective humility. In the ruins of speculation, society began to reconsider what responsibility meant, what government owed its people, and what people owed each other. Throughout these years, the psychological shadow of the Roaring Twenties loomed over every decision. Policymakers faced a dilemma: how to revive an economy built on credit when credit itself had become toxic, how to resurrect demand when consumers were drowning in debt, how to restore faith in markets that had betrayed millions. The answers did not come quickly, nor cleanly. Hoover resisted large-scale intervention, fearing it would weaken American character. But character could not substitute for capital. As deflation set in, prices fell further, making debts heavier in real terms. Farmers dumped milk in ditches because it cost more to ship than it was worth. Homes were lost. Families migrated. Everything that had once symbolized stability, jobs, savings, communities, seemed to crumble. Yet, even in this darkness, the legacy of the Roaring Twenties continued to shape outcomes. The very technologies that had transformed life earlier in the decade, radios, automobiles, assembly lines, played unexpected roles in crisis response. Radios spread political messages faster than ever, fueling both despair and hope. Automobiles gave itinerant workers mobility. Mass production, once a symbol of abundance, now became an emblem of inefficiency in a world with too little demand. The infrastructure of modernity, built during the boom, became the scaffolding upon which recovery would one day rest. By 1932, the country reached its nadir. A quarter of the workforce was unemployed. Banks failed in waves so fierce that deposits evaporated overnight. The stock market had lost nearly 90% of its peak value. Bread lines and Hoovervilles dotted the nation. It was a portrait of collapse whose roots were unmistakably planted in the excesses of the previous decade. And yet, from this low point emerged one of the most pivotal transformations in American economic history. Franklin Delano Roosevelt's election in 1932 marked not merely a change in leadership, but a philosophical upheaval. Roosevelt understood something Hoover did not: that the crisis was not just financial, but emotional, and that restoring confidence required both policy and narrative. His fireside chats, intimate, calm, instructive, helped rebuild the nation's sense of collective purpose. But, more importantly, his New Deal introduced structural reforms designed to tame the speculative chaos of the 1922. The Glass-Steagall Act separated commercial and investment banking. The Securities and Exchange Commission brought transparency to stock markets. Social Security softened the blows of unemployment and aging. Public works programs infused capital into communities ravaged by joblessness. The New Deal did not end the Depression, but it redefined the relationship between government and markets, ensuring that the unfettered exuberance of the Roaring Twenties could never again run unchecked. As the decade wound on, the memory of the 1920 seconds evolved from a nostalgic shimmer into a cautionary tale. It became the story of a society so enamored with progress that it mistook speculation for prosperity, leverage for strength, optimism for inevitability. And yet it also remained a testament to human creativity, innovation, and desire, a reminder that the same impulses that spark progress can, without discipline, ignite collapse. In that tension lies the truth of the Roaring Twenties, a decade defined not only by its brilliance, but by its blind spots, by its soaring ambitions, and its catastrophic fall. And so, when we look back at those extraordinary years, what we see is not merely boom and bust, but a mirror reflecting the recurring arc of financial history. We see a cycle shaped by hope, excess, fear, and reinvention. We see the blueprint for crises yet to come. And we see, most of all, the enduring lesson that prosperity built on speculation is a house of glass, beautiful in the light, shattering in the storm. If this journey through the Jazz Age stirred your curiosity, if a moment, a figure, or a theme felt suddenly alive, share what resonated most. And if you like more deep, cinematic explorations of how financial history shapes our world today, follow the channel so you never miss the next chapter. 5 days later came Black Tuesday, a day whose very name feels heavy, like smoke. 16 million shares traded. Prices plunged beyond comprehension. Fortunes vanished in hours. Lives upended. The speculative dream cracked open, revealing the hollow structure beneath. The Roaring Twenties, which had dazzled the world with its music, money, and momentum, now stood exposed as a decade built on leverage and illusion. And as the confetti of the Jazz Age settled into dust, America braced itself for a reckoning far deeper and darker than anyone had imagined. A reckoning that would